What's going on, everybody? It's Jeff here. Welcome back to the channel. In this video, we are going to be talking about the top 2 stocks I have been watching recently. One of them I already added to my portfolio. I told everybody in our private group that I was adding a position in this stock. It is already up 10% and it still has a lot of room to run. The other one I'm going to be talking about is one that I'm watching very closely. I am looking at the charts at the 180-day and the 90-day charts, waiting for a specific action to happen. I'm going to go over that. The reason why I'm making this video, guys, because I know a lot of people jump on here and talk about stocks that have already ran up a lot, and some of you guys have gotten caught chasing stocks and therefore you're left holding the bag. That has happened to me much earlier in my investing years, and you know what, I'll be honest, guys, it still does happen from time to time. So I wanted to come on here, talk about these 2 stocks, and then also go over some of the news and the catalyst behind what is going to make these stocks move higher, and then also take a look at the charts to give you guys an idea of what to look for when it comes to other stocks as far as patterns and indicators and so forth. So before we get into this video, guys, all that I ask is that you hit that like button and subscribe to join the family. If you're interested in joining our private community, it's the first link in the description. I have my private portfolio over there. Like I already said, I go over all my stock picks and be able to get to help you guys break down your stock picks. And it's a great group of men and women that all come together and strategize to take our portfolios to the next level. So if you're interested, guys, first link in the description. We'd love to have you. Let's get into the video. I first off want to mention this one to you guys, Blink charging. I had talked about it on a video previously. It is already up over 10% as it has really gotten to break out. This is a perfect chart for formation. It began to make those higher lows. It looked like it got a little bit rejected, okay, by the 180 moving average, consolidated for a bit, and now is beginning to move higher. Blink Charging is a phenomenal company. I'm not going to get into it. You can watch my last video, but I wanted to point this one out. Next one I wanted to point out too that I mentioned as well numerous times, Palantir. It is still consolidating at that mark, okay, at that solid $22 to $23 range. This is one I'm still very bullish on. I talked about it when it was at that $21, $22 range, but more importantly, guys, if you're looking to minimize your risk and you're going to buy at least 100 shares of this stock, you can sell a November 19th covered call against those 100 shares. I believe the premiums now at $35 strike price are going for about $2.45 a share, which is huge, and it brings your average cost down to already $21. So these are moves that you can make to really take your portfolio to the next level and minimize your risk, guys. So if you're interested, take a look into this one, guys. All right, let's get into what we are going to be talking about today. The first one I'm going to be mentioning is Jumia. Jumia is an e-commerce technology company. Okay, it focuses most of its operations in Africa. It rose up really, really high into that January mark. Okay, came all up even higher. And as you look right here, we are looking at that high of 69.89. It is the date, the February 11th date, when the NASDAQ really began to sell off, okay, and all of these high growth, a little bit overvalued stocks really took a beating. All right, it's currently sitting at that $38 mark. It reached seemed like a support around that $35 range. Okay, that previously had it here, bouncing off the 180 moving. Hit that again, pulled up all the way till it hit that 180 moving, which acted as a resistance now at that $53 level. Came back down to about that $34, $33 mark, and now it is beginning to push up a little bit. This is one I have not added to my position yet. The reason being is because if you look at the MACD indicator, which you cannot really see yet on my screen, let me move this over. At the MACD indicator, it looks like it is potentially starting to reverse, and I'm going to want to see a little bit of consolidation happening right here, and also see if the 180 moving acts as a resistance again, because it already did once. If this does begin to consolidate and push up and break through that resistance, it looks like it will probably break that at around that $40 to $42 range by the time a couple days play out, potentially a week and a half plays out. If it does break that and holds above that, I will definitely add this to my position. Even if you purchase it at that $42 mark, like I had stated, and you run it up to its recent highs, that's a 26% gain. That is huge, guys. If it decides to go back all the way up to the $70 price range, you are looking at a 74% gain. So let's jump into a little bit of the news and why I'm even bullish on Jumia besides the stocks. First of all, it declined in March because of a broader pullback like I talked about, but it also announced a secondary offering, which also pressured the stock. If you can see the charts, it was a really hard sell-off on top of just the natural NASDAQ selling off. The treasury yields rose as well, all the way from 146 to 175 in March. Okay, since then the treasury yields have begun to cool off, which is why you see money start flowing back into those high growth stocks. Keep that in mind. Money is starting to shift a little bit back into those high growth stocks as you see the NASDAQ starting to come up. So now what? Jumia shares fell as low as $215 last March at the start of the pandemic and rose as high as $70. So it is a very volatile stock. It is okay to invest in stocks that are very volatile as long as you know that you're investing in a very volatile stock. That means very tight stop losses, okay, setting trailing stop limits. You always want to be able to protect your gains. But this is very important, guys. That pattern is likely to continue given the company's future is wide open. Jumia is the leader in e-commerce in Africa. It does have business struggles, and it does also, because they're in Africa, okay, it has the lack of infrastructure, which obviously causes the company to struggle. But like I said, the point of the matter is that knowing when to enter and when to exit. This is a perfectly put statement right here, okay? It raised $340 million, and the last time it did a raise, the stock took a hit, and then it traded up to all-time highs. He expects the same, Stephen Weiss, he expects the same thing to happen now, and he decided to add it to his long position in the stock. So my point on this and my play on this is wait for it to break above that 180 moving, get it to ride up, make your 10, your 15, your 20%, whatever your exit strategy is, and get out of it. We are in the second year of the bull run, okay? So it's not as easy to just throw a dart, pick a stock, and let it ride all the way out to the promised land, okay? You need to be able to, collect those gains much more quicker to be able to secure profits, all right? So next one we are going to be talking about right here is one that I added to my position. I told everybody in the group it has broken that resistance as it was showing a strong sign of support around that $100 mark. Broken up, it's sitting at 122. It's up 6% for the day. It is Peloton. So Peloton did phenomenal in 2020. A lot of investors saw this as a stay-at-home play, and it began to sell off a little bit when naturally those high growth stocks began to sell off. Okay, but also the fact that they thought that this was only a stay-at-home play. However, I am seeing this, and I think other investors are also starting to see this, that this is not a stay-at-home play. This is a convenient, okay, play when it comes to the fitness industry. So gyms are going to get back. People are going to go back to the gyms, and that's inevitably going to happen. However, there are a lot of people that have gotten comfortable, okay, with their new way of life, okay. Life began to slow down a bit, and you're also looking to make things that are more comfortable. They have a subscription-based model. It is very interactive. That old school strategy of going to the gym, running on the treadmill, you have to drive there, you have to drive home. Many people are going to go back to it. Many people still do it. They live and die by it. However, Peloton offers a next level generation for that. And I'm also very bullish on this company because they are continuing to crush their sales quarter over quarter. Okay, and I think they have an issue. Okay, right here it says investing in the supply chain. They had an issue being able to produce enough bikes to keep up on the demand, and that has continued even as the reopening of the economy and reopening of gyms has started to recur at a much more faster pace. So I want to point this out a little bit more about Peloton. This is a great article. Investors.com, is Peloton a stock buy amid post-COVID expansion plans? It is very, very long, so I'm not going to get into all of it, but I'm going to just talk about a few key topics. It generates most of its revenue selling the bikes and treadmills. It's a very premium price, $1,900 to $4,300, and of course it has that SaaS model, which I love. I'm sorry, not SaaS, guys, subscription-based models, okay? It's monthly revenue, it's a very low cost, and it's a digital product. It's just high profitability, high profit margins. Absolutely love it. Okay, they also acquired a few different companies, Atlas Wearables, Otari, and Aquido. They all do different things, which is great. They also did just purchase Precor. The deal finally went through for Precor. Precor, it actually makes bench presses and natural equipment, ellipticals, and so forth, which is great. They're just penetrating even farther into the fitness industry. Their fitness subscriptions grew 134% to 1.67 million, and Page digital subscriptions skyrocketed 472%. So they are vastly growing. Okay, they also inked a deal with Adidas on an apparel collaboration. So they are continuing to grow and grow and grow, which is huge. Last thing I want to point out, guys, is it is rated a strong buy from analysts and has a price target of 162.52. So if you're looking at this right now, like I said, it broke through that last form of resistance, that 180 moving average, and it still has plenty and plenty of room to run. 37% gain from all-time highs, guys. So listen, keep this one on your radar, guys. Let me know what you are also looking to get into, and I hope that this video just at least gives you an idea of how to track stocks. Spend a little bit of time, spend a few days, okay, spend a few weeks watching the patterns, watching the charts before you just immediately get into investing in a stock. So that's it for this video, guys. I'll see you in the next one.